This particular presentation was prepared by Luvasi Stwala, Goodson Mwandila, Christina Mvula, and Maximilian Bwalia. And the person who's presenting this particular presentation is Luvasi Stwala. The title of this presentation is Investment Decision Based on Financial Statement Analysis. And the purpose of this presentation is to advise a retired investor who's considering investing 1,500,000 kwacha into one of the companies that's listed on Lusaka Securities Exchange. But what this particular presentation will be focusing on, or the company that this particular presentation will be focusing on, is Airtel Networks Zambia Limited. As an introduction and a disclaimer, this is a student project by Entity Consultancy Services, which is a fictitious name, for Dr. Brian Kaula's financial statement analysis course at the University of Zambia. The content presented in this particular presentation are for academic purposes only and should not at any point be used as actual financial advice. Airtel Network Zambia PLC is a public company in the mobile telecommunications industry, which was incorporated in Zambia under the Companies Act of 2017 as a public limited company and has since been operational here in Zambia. The company is listed on the Lusaka Stock Exchange and was incorporated in 1997 as Celtel Zambia PLC before it changed its name to Airtel Networks Zambia PLC in 2013. The principal activity of the company is the provision of cellular radio telecommunication services. Its financial statements are prepared in accordance with the International Financial Reporting Standards and in the manner that's required by the Companies Act of 2017, as well as the regulators, who are the Securities Act of Zambia. The sources of the financial statements are basically from their website. Getting into the meat of this particular presentation, that is the quantitative financial analysis. We're going to start with the analysis of profitability. So assuming that you already have the financial statement, each line item of the income statement as a percentage of revenue. And basically this is what we are seeing here. Just a brief comment on the total expenses. One thing that we're able to see is that the total expenses were fairly constant across the years because they decreased by 5% from 2021 into 2022 and slightly increased to 61% by 1% from 2022 to 2023. Thus remained fairly constant. But one thing that will provide us with a lot more information is the operating profit. So one thing that we're seeing here is that operating profit was increasing across the years because in 2021 it was 35% and it increased by 5% in 2022 and then remained constant from 2022 to 2023. In terms of the profit, we had 19% in 2021. It increased by 1%, increased by 2% in 2022 from 19% in 2021. And decreased by 1% in 2022. I think fairly it should be increasing, but let's get to look at the diagrams on the next page just to get a more detailed judgment of the trend. And from this, what we're able to see is that the operating margin for Airtel was increasing over time. It showed an upward trend across the years. Now, quickly get into the net profit margin. The net profit margin for Airtel showed an upward trend from 19% in 2021 to 21% in 2022. However, its net profit decreased by 1% in 2023. But overall, the net profit margin for Airtel showed stability and improvement over the years. I think just even from looking at the trends, one particular thing that we're able to do is that we're able to forecast that in the coming years from 2024, 2025, the net operating margin potentially will also be increasing given the trend that we have here. Now, in terms of profitability, we are also able to look at the return on equity. And in 2021, Airtel had a return on equity of 2.1%. This return on equity reduced in 2022 to 1.37. Sorry, these are not percentages, but these are figures. And in 2023, the return on equity increased to 2.59, and overall the return on equity for Airtel showed an upward trend. Now we quickly get into the analysis for solvency and liquidity, and this particular statement is a common size statement of financial position, and each line item has been presented as a percentage of total assets. And maybe just a brief comment on the working capital, that's comparing the current liabilities and current assets. So in 2021 we have our current liabilities at 11%, 2022 at 17%, 2023 at 18%. So the current assets were increasing over time. But when we come to our current liabilities, total current liabilities, we have 56% in 2021, 54% in 2022, and 55% in 2023, which shows a fairly constant trend. But one thing we're able to pick out from this is that Airtel Zambia, across the 3 years, maintained a negative working capital position. And we're able to look at the liquidity ratios here, which in 2021 it had 0.2, in 2023 it had 0.31, and in 2022 it has 0.31, and in 2023 it had 0.32. But just to help us imagine the structure of its working capital better, one thing that we're able to see from this in 2021 is that it had more liabilities, current liabilities, as compared to its assets, but its working capital position slightly improved, though it was still negative in 2022, and it fairly remained constant in 2023. And the overall analysis is that Airtel maintained a negative working capital position across the 3 years, even though its working capital position improved by 11% in 2022. It still remained negative in 2023. And overall, Airtel was not able to meet its short-term liabilities given its total current assets. And from this, we can quickly get into the cash ratio. And the cash ratio for Airtel is also not looking good, because in 2021, Airtel only had 2% of cash against 98% of its current liabilities. Its cash position slightly improved by 3%. That was 5% in 2022, but it still wasn't sufficient enough to cater for its current liabilities. And its cash position reduced by 2% again in 2023. And it was sitting at 3%, which again was not sufficient enough to cater for its current liabilities. And just an overall judgment is that Airtel showed no potential to meet its short-term obligation without relying on other less liquid assets for all the 3 years. Now, coming to the solvency analysis, we'll quickly get into the leverage ratio. And from the leverage ratio, one particular thing that we're able to see is that Airtel is highly leveraged, because when you look at the total assets for 2021, only this part of its assets, which is close to 8%, is being financed by equity. The rest of its assets is being financed by debt, and which is basically the same, which is fairly the same thing with 2022 and 2023. And the overall conclusion is that the figures that are above here are basically illustrating the extent to which Airtel uses debt to finance its assets. And because the ratio is really high, Airtel had a high financial leverage, and as a consequence, it has got the ability to amplify both the risk and Airtel's return. Coming to the debt ratio, what we're seeing is that Airtel's borrowing or Airtel's debt was increasing over time, was increasing more than equity. And the ratio measures the proportion of Airtel's financing that comes from debt if compared to equity. And Airtel maintained a highly relative ratio for all the 3 years, a high debt to equity ratio for all the 3 years, suggesting a huge reliance on debt. The implication of this again is that it does not only increase the risk to equity holders and creditors, but it also magnifies return when the company fails to perform. However, when we look at the interest coverage ratio, one thing that we're able to see is that despite Airtel being highly leveraged, there's enough evidence here from the interest coverage ratio to suggest that across the 3 years, Airtel was able to meet its interest obligation with just its operating earnings. Because again, the conclusion is drawn from the evidence of the high ratios, which are a positive sign, and are therefore indicative that Airtel's earnings are comfortably sufficient to cover its interest payments, suggesting a low risk of default. Its position remained fairly constant over time when we look at the trend. Now, quickly getting into Airtel's analysis of cash flow, one particular thing that we're able to see again when we present the cash flow statement in terms of total revenue is that we're able to basically forecast and have a better interpretation of the cash flows, and also be able to identify trends and forecast future cash flows. And this is basically a presentation of its cash flow. But quickly getting into the summary analysis of its cash flows, what we're able to see is that across the 3 years, Airtel maintained a positive operating cash flow, which relatively remained stable over the years, which is a healthy sign. Furthermore, investment cash flows showed an upward trend across the 3 years, representing a significant use of cash. One thing that we're also able to see that its financing activities, which are these here, increased or slightly increased across the 3 years. But just to try to get into the details to see what's driving investment cash flows, one thing that we're able to see that the major driver of investment cash flows was the purchase of property and equipment and the purchase of intangible assets across the 3 years. In terms of its financing activities, one of the major drivers of its financing activities was the payments to its lease liabilities and borrowings. But however, the interest payments remained fairly stable across the 3 years. Airtel dividends payments to its shareholders increased also from 13% to 24% in 2022 and 2023. And these were some of the biggest drivers of the financing activities cash flow. Now, we can also get into the meat of the cash flow by looking at the coverage ratios. And from this, what we're able to see, the free cash flow to the firm, what Airtel Zambia was generating an expanding cash flow between 2021, 2022, and 2020. But what will give us a more solid analysis is the debt coverage ratio. The ratio shows Airtel's ability to pay debt from its operating cash flow. A ratio below 0.1 indicates operating cash flow that operating cash flows were insufficient to cover total debt across 3 years. This aligns with the solvency ratios, and thus confirming that Airtel had a huge debt load with insufficient cash flow generated to service it. In terms of the dividend ratio, Airtel generated sufficient cash from operating activities to pay dividends to its shareholders. Now, given this particular analysis, should the question of to invest or not to invest, one particular thing that we've done throughout this presentation is that we have considered a decent amount of Airtel's components. Now, one thing that has come out to be predominant is that Airtel is highly leveraged. The other thing that has also come out is that Airtel across the years maintained a negative working capital position that was showing us, or that was enough evidence for us to conclude that it was in a liquidity crisis for all the 3 years. And the other thing that also came out to be predominant is that Airtel is not generating enough cash flow to service its debt, and this particular information is being given by the debt coverage ratio. So based on those particular points, it would be prudent for the investor not to consider to invest in Airtel. Number one, because it is highly risky because of the leverage. It is unable to generate enough cash flow, operating cash flow, to pay its debt, and it is also in a liquidity crisis. Based on those factors, it wouldn't be so prudent for an investor to consider investing in Airtel unless the investor is a risk-loving investor. But overall, if the investor is perhaps risk neutral or risk averse, it wouldn't be advisable to invest in Airtel Network Zambia.